This is Matt Russell from the FX Power Course, and welcome to the DailyFX walkthrough.
So here are the four pairs that I will be discussing this evening: the Kiwi dollar, Aussie dollar, the Euro dollar, and the dollar yen. So let's go ahead and pull up the charts. The first chart is the Kiwi dollar. This is the triple bottom that I mentioned, I think, 2 reports back. I have entered this trade from just above the 52 figure and have my stop placed below the 51.65 low. That's the low of this candle right here, the third bottom of the double bottom. So right now I am holding. Now if you are listening to this for the first time this evening, what you might do on the shorter term chart, this is now the hourly chart, but again this is very short term analysis, is add a simple support line and maybe look to enter along that support line with a stop maybe 50 pips or so beneath it. And certainly if there's an hourly close, we would abort the mission at that point as well. The next chart is the Aussie dollar. Not much has changed here. I did add, this is the daily chart, I did add a simple support line here. Ideally I would like to see a little more separation, which means a few more days would pass and then look for the third touch of this support line, but nothing has set up at least for the next 24 to 48 hours on this pair. The next chart is the Euro dollar. This is the daily chart. As I mentioned, that 78.6 fib did act as support. We did not have a close beneath it. We had a close actually just on that level, and now prices have rebounded slightly, but they're sort of meandering now, and ideally we'd like to see a little more impulsiveness with the rally off a major fib level such as this. So that's not an encouraging sign on the bullish side, but I still would maintain that bullish bias against the 78.6 fib. And again, these are the fibs from the 123 low to the 147 high if you want to draw them yourself at home. And also the hourly chart as well, we can do a similar thing that we did with the Kiwi dollar, which is the short-term support line, just connecting the lows very simply. But again, this is short-term analysis, and the likelihood of this line holding is not very high when compared to a similar line, let's say, on a daily chart. The last chart is the dollar yen, and this is the head and shoulder pattern that I mentioned a few reports back, where I did enter at the right shoulder over here near that 91 figure. And again, I am still in this trade. I did not cover any portion of my position. I was thinking about doing so down there as prices came near the 88 level, but I still have my entire position right now with a stop located at the 91.20 area, which is this high over here where we have a little bit of spillover on the right shoulder. And to reiterate the head and shoulder pattern here, we have the left shoulder here, the head here, and the right shoulder over here. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.